Hello, welcome back to another video where I will answer the question if gold is a good investment going into a recession. I'm going this blind, so everything that I will show in this video is brand new to me too. Okay, so we will learn something together. On the screen, I had GLD is the candle, red and green line, and then of course the S&P 500 is the purple line. And this yellow vertical line is when the Fed start to cut rate in the 2008-2009 recession. The time frame of this chart is, of course, as you can see right there, January of 2008 through December 6th of 2009. Okay, so no doubt you can see that gold outperformed the S&P 500 going into a recession and coming out of the recession. No question. There is a reason why YouTube and CNBC has plenty of people touting gold is a place to go, right? We all heard that the past few weeks, if not the past few months. So this chart at least confirms that if you hold and buy into gold, go into a recession, you're likely to outperform the S&P 500 into the recession and coming out of the recession. So that answers the question. But the next question we have to ask is it better than bonds, long bonds? Is it better than consumer discretionaries? Is it better than technology? So let's compare it with some ETF to answer some of that question, okay? Before I do it, like I said, this is going blind for me, so I don't know the answer, but my hunch tell me that there are better investment choices out there instead of GLD. So it's not a bad idea to have some exposure to gold, to GLD, as I have, and start to build a position. But there is no reason for me to pile into gold as if it is the best alternative investment going into a recession. That has been my view for the past few weeks. But let's see. Let's the data speak to us. Okay. So let's see. Add study, compare. So the first thing we want to compare it with is let's do TLT. Okay, TLT. There you go. Look at that. So it did better than TLT, as you can see, right? So look at TLT. For those that watch my video that I load yesterday on TLT, on my roadmap on when to exit, yes, it is good to hold TLT into the Fed cutting rate and exit when the Fed done cutting right here in December, right? After that, it's done. You're done. Okay, there is no more. So it is clear as night and day that TLT is the better investment until the Fed stop cutting rate, right? Based on what happened in the 2008-2009 recession and stock market crash, okay? At least that's clear. Sure, the smart thing to do is scale out of TLT and put some of that money into GLD. There is time. The main takeaway that I want to show is there is no reason. That was my belief last month, last week, today. There is no reason to pile into GLD right now or FOMO into it. I buy the dip, I sell put spread, I take my sweet time. Okay? All right, let's compare to other indices. So we know GLD. So let's not make the chart too confusing. Let's remove TLT. Okay, so we're not going to clutter up the screen with too many things. Remove TLT. Yes, so now let's add in something else. Let's add, come on. Let's add in QQQ. Okay, look at that. No doubt, the best place to do, the best place to keep your money is still in gold, right? It's not a surprise to see the QQQ did slightly better than the SPY, but it's still pretty poorly compared to gold. So there you go. It's a clear winner there. Okay. All right. Let's take out Q. Well, just leave QQQ for now. Let's add in the one sector that we know from past video that outperformed the SPY by a lot, and that is consumer discretionary, XLY, the ETF. Wow, look at that. Look at that. Okay. Sure, it is better. As we know already from the previous video, that the consumer discretionary did better than the S&P 500, but it still underperformed gold. Okay, looking good. Let's add one more. Keep on adding. Let's do XLV. Same thing. Okay, same thing. So it starts to make sense why there is a buzz about gold. Now it starts to make sense, okay, as we keep comparing it to other indices. It starts to make sense. But hey, we're all learning something today. I learned something today. It's never too late to learn something. How about the banks? XLK, XLB, I mean. XLK is the tech, the financial, same thing. Okay, so without wasting any more time, it is quite obvious that gold outperform the equity market substantially coming into a recession and coming out of a recession. So there you go. But you have time. If anything, it teaches you and show you that there are plenty of time to build a position into GLD. As you can see right here, okay, that's when the Fed start to cut rate. Now, do I think the Fed is going to start cutting rate this year? Absolutely not. Can I see the Fed cut rate sometime in the first quarter of 2024? I think there's a good chance, okay? For sure, I think the second quarter of 2024 is more of, if I have to make a bet, I think there is a 50-50 chance that the Fed will start to cut rate in the first quarter. But to me, it's a higher probability that the Fed is going to cut rate before the end of the second quarter. So sometime between January and June, I can see the Fed start to cut rate and probably finish cutting rate in 3 to 6 months, whenever they start. Whenever the Fed start to cut rate, it's not unlikely that they will be done cutting rate 3 to 6 months down the road. That has always happened in the past many recessions. So I'm sure the same pattern will happen. The Fed take the stairs on the way up as far as raising rate, but they take the elevator down when they cut rate, right? So it's a rapid descent when they cut rate. That's why TLT spike in literally 2 or 3 months. So hopefully this video outlined clearly why there is a lot of talk about gold in the past few months. And if anything, hopefully it shows you that you have time to build a position. There is time. You don't need to chase into it right now, okay? That's what I'm doing. Thank you for watching. Bye-bye.